it's official.
Good morning.
First of all, I'd like to thank everyone for showing up. Appreciate it.
Hey guys, so we're going to go ahead and record this session as well into a Facebook group that I'm part of, because we also going to be doing this as an opportunity to train some real estate agents on how a live buyer presentation, a live buyer seminar works. So if you see me looking over here and checking out comments or saying hi to like Elmer, for example, that's what we're doing. So appreciate your patience. Just so you guys over here know, we are at Staples in Rancho Santa Margarita in Southern California, and Staples is offering this opportunity for the spotlight space. They're kind of like testing out to see how allowing people to come in and do presentations. They're doing like these, what would you say, like a mini conversion. It's kind of a beta test to see if providing the space brings more foot traffic into the stores and then adds value to the community. So we're fortunate to be able to use that today. And
they've done a couple hundred of these nationwide so far, so check in your area to see if maybe you have one.
Yeah, so they're definitely growing. They're not in every market by any means, but I think they're working on it. Like I think down here there's 14 of them or something like that. So anyway, so thank you guys for being here. My name's James Hoff. I'm a local realtor with Agent Inc. This is my colleague Ron Evans, also with Agent Inc. Both of us have been practicing real estate for several years now. I'm in my 8th year.
I'm in my 5th.
5th year for Ron. Okay, so a couple of pretty mediocre experience. No, I'm just kidding. So Agent Inc. is a local brokerage down here. We got a few hundred agents. Ron and I both operate independently, but we collaborate on a lot of different things. And one of the things that we wanted to do today was just give you an opportunity to learn a little bit more about the home buying process. This is very much just an information session. There's no hard sell. There's no, we're not like, trying to get your info and getting you to, like call us and let us bother you or whatever. If you have questions, we're more than happy to be part of that journey. Whatever that looks like, but if our journey with you starts and stops here and you work with someone else or you kind of go about your business differently, that's also more than fine.
Yeah, that's really it, James, is while candidly we would love to have all your business, we understand that's not always realistic. You've got a favorite person you want to work with or what have you, but in our time in the industry, we've come across lots of deals where someone on the other side of the table from us was not educated properly either by the current agent or maybe the agent themselves to know what's going on. So we've just thought it's the best thing if we can educate as many people as we can, so if we're ever on the other side of the deal from you, we know that we've done our best to put our best foot forward with you.
Yeah, in case your agent doesn't know what they're doing.
Exactly, in case your agent doesn't know what they're doing.
So let's go through this really quick. We'll be here for probably about, I'd say 40 minutes to an hour. We're not going to take up your whole day here. And then, of course, if you have any questions, feel free to ask. And then I'm going to yield a little bit over here as well. If any of the agents have questions, or then we'll take some of those too. Home buying basics. We're just talking about today taking the steps to home ownership. So let's quickly go over what we're going to cover today. Kind of when you get the itch, starting your research, what does that process look like? What should you ultimately be doing, and what does that look like? Debunking myths, I think.
This is going to probably be the biggest thing that we talk about.
Yeah, a lot of myths when it comes to home buying. There's we kind of live in this world of information overload, so everybody feels like a genius, right? And we'll talk about a few of those things. Are you qualified? When you should involve a lender? And we'll talk about when you should involve an agent as well. A lot of times people involve an agent probably later than they should in the process, so we'll kind of go through that. Once you do get qualified, what's the process moving forward? Now what, right? What do you do after you get qualified? What's the process from there? And then your offer got accepted. What the heck is escrow, and how the heck does that work? The confusing chaos in that.
Yeah, because you may have gone through this process somewhere else, and escrow in California, especially Southern California, is different than probably anywhere else in the world. So it's the most litigious state, and there's reasons behind that, and our contracts are huge, and we're going to kind of go over the ins and outs just to make sure you guys are good.
Yeah, this is not an education today on how to sue us, by the way, so don't get your hopes.
Full disclosure, we are not attorneys. Do not take anything we say today as legal advice.
Yeah.
Full disclosure.
Yeah, absolutely. And then of course, at the end of this, hey, you bought a house. One thing I do want to say though, guys, is buying a house is complicated. There's a lot of paperwork. There's literally hundreds and hundreds and hundreds of pages of documentation that go into purchasing a home, between the contracts, the HOA documents, all the different disclosures and the loan docs and all that stuff. So I want you to know that what we're doing here is kind of a 30,000 foot view. We're kind of giving you the flyover of the home buying process. For those of you who've never bought before, we're hoping that this kind of opens the door and helps you realize that this doesn't have to be an incredibly intimidating process, and that it might be more attainable for some of you than maybe you realized before. So.
And when we finish, if anyone's interested in more information, we are definitely available for a deeper dive.
Yeah, absolutely. So, but this will give you the basic overview, and like we said, we'll be available for more. And if you don't want to talk to us, you're compelled to talk to somebody else. That's fine. At least you'll have maybe the basics to inspire some questions.
Right.
So, you want to kick it off?
Yeah. So when you get the itch, where to look for homes? So by show of hands, who's ever heard of Zillow? How about Realtor.com, Homes.com, Trulia, et cetera, et cetera, et cetera. So basically what we're getting at here is most people, when they go to look for homes, are going to start online. It's perfectly normal in this day and age to do that. We're going to cover some of the pitfalls and things that you might experience when you do that as far as information is concerned.
Yeah, and just so we're clear, like when you look for homes, one of the things I would tell you guys right off the bat is there's no wrong place to look for homes. Real estate technology, we the things that are MLSs and local boards and the National Association of Realtors, when they invest in building technology, they're building that technology to help the agents so that we can run a business. Sometimes the interface for the consumer side doesn't look as pretty, but it's more functional for the agents because we're doing a lot more analytical and need access to certain things that maybe the general consumer doesn't need when they're just looking for homes. So the first thing I would say is when you get the itch, there's literally no wrong place to look for homes. But with that, we're going to talk about, in just a couple minutes here, we're going to talk about what you should know about where you're looking for homes. But any agent that you work with should be able to provide you a search through their MLS, and then they should also be able to provide you the ability to just send them homes from whatever app it is that you're looking on. If you like to look on Zillow and that's like the best thing for you, totally cool. You should have an agent that's willing to take that information and be able to look it up for you through the MLS and verify and validate. So when you get the itch, there's no wrong place to look for homes, but you should always double check with an agent because we have access to the most accurate data, which is going to be directly through the MLS. So when do I involve an agent? And I think for me, this is probably one of the biggest things that became eye-opening when I got into real estate a little over 7 years ago. I think there's this idea that we can go online and we can get all the information and do a whole bunch of research, right? You can do the WebMD and then diagnose yourself and then go into the doctor and say, listen, I just came in so that you could write me the prescription. I already know what I got. And unfortunately, what I find happening quite often is that people don't involve an agent or a loan officer or somebody professional in the industry that can help you until it's too far down the line. And it doesn't mean that we can't recover and get you on track, but it means that it might prolong the process. And if you wait to involve an agent until you find the exact house that you like, you may lose out on that house. So involving an agent on a little bit earlier on in your search, when you start getting the itch, right? When you start looking for those homes, it doesn't mean you have to go sign an exclusive buyer agreement. It doesn't mean that you have to go write contracts with that agent, but don't be afraid to say, hey, listen, I'm early on in my search. I would appreciate if you respect the fact that I have not selected an agent yet, but I would like to have you and maybe a couple other resources that I'm interviewing or looking into so that I can get some information to have questions answered when I have them. So don't be afraid to involve an agent early on. You're not getting married right off the bat. If you don't like how that agent works with you on the front end during your home search process when you get started, you may sit there and go, oh gosh, well, maybe this isn't the agent you want to work with when you're writing offers and getting into escrow. But you should involve an agent very early on in the process so that you can make sure that all your ducks are in a row. So when you're ready to write an offer, you're good to go.
I would say also getting them involved as soon as possible is the best thing. But also don't be afraid to talk to more than one agent.
Absolutely.
Just because you walk into an open house or you find out that Uncle Milton has a nephew somewhere else that he just got his license, that he'd like you to keep the business in the family, that's all well and good. But that person may not be the most qualified to work with you. There's lots of different things that make someone qualified to work with you. There's a comfortability factor, there's their education, there's their background, and just their overall competence. So don't be afraid to just, if you latch onto the first agent and you've got some questions they can't answer, don't be afraid to reach out to somebody else and ask questions of somebody else. That's a big takeaway.
Yeah, any geography, anywhere that you buy a house, it's going to be expensive. But we live in a pretty affluent market out here, guys. And home prices are a little above average from a nationwide perspective with respect to cost. And this isn't something that you want to get wrong.
Right. This isn't. We talked about technology for a second there, and I started thinking of now you've got Carvana. You can literally go online, buy a car, and go down to like a vending machine and get your car. Soon, that will probably be an option in real estate to buy a house.
Yeah.
I don't know about you, but I don't care if it's 300,000, 500,000, a million, or 10 million. I would have serious reservations about buying something like that sight unseen. It's no matter who you are, what price point you're in, market you're in, buying a home is probably still going to be the most expensive purchase you've ever made in your life, or multiple times in your life. So you got to get it right.
Absolutely. Now here's one of the things that I think a lot of real estate agents really kind of tickles us to death.
Yeah.
In fact, my sister just went through this, which I kind of get a kick out of. Put her information into a third-party website, i.e. Zillow, and that's not bad, by the way. A lot of people think agents hate Zillow. Some of them do, and I think that's misdirected anger because they think they're trying to put us out of business.
It's a love-hate relationship.
Yeah, I don't like Zillow. I don't dislike Zillow. We all have our pros and cons. Far from perfect. Don't tell my wife. But so what happens to your information when you put it on a third-party website? Guys, third-party websites, they're collecting your information to sell. That's not a bad thing. I think that information gets sold. I think 100 times over, and even if the proper privacy disclosures are in place or not in place, doesn't matter. Like your information is going to get sold.
Yeah, if you've ordered Papa John's or Pizza Hut or whatever, it's no different than going online and putting your information in to talk about a house on Zillow or Realtor.com.
Yeah,
It's all the same.
So what happens to your information on a third-party website? Just know that companies like Zillow, Realtor.com, Homes.com, Home Finder, pick a million others. I mean, Trulia. Redfin will keep it for themselves, but they'll still give the information to their agents to call you. So one thing that you guys just need to be aware of is when you put your information into a website, that is not the MLS, that is not coming directly from an agent. Just understand that they are going to take that information and sell it on Zillow. To give an example, they will sell that information to multiple agents, 3, 4, sometimes more agents than that. So if you put your info in, one time.
At one time.
Yep, and then on top of that, they could be selling it to loan officers. They could be selling it to other parties as well. So and by the way, I'm not trying to take a dump on them. I'm just letting you guys know that when you put your information in, sometimes you think that you're being connected to the listing agent. That's not the case. It is possible, but you need to make sure that you're looking, is this the listing agent, or is this a premier agent, or a preferred agent, or a superstar, hero agent, whatever. It's just important that you understand that your information goes into a third-party website and it is going to get sold.
And we'll talk about it more in the debunking this part, or we can touch on it as far as how those things work.
Yeah, absolutely. Absolutely. Cool.
Debunking some myths.
Speaking of which.
I need 20% down. Okay, this is pretty much an old school mentality, but how many people in here think that you do need 20% down? Or at least that's what you've heard. Or you need a sizable down payment.
Okay, back here.
Okay, yep. Okay. It's very, very common to think that, and we're going to touch on that.
We'll touch on it now.
We're going to touch on it right now. Yeah, so in today's day, there's lots of different lender and loan programs out there. Because when you're in a market like we're here in Orange County, where the average price is $750,000, not everybody has, 150 grand sitting in their back pocket, plus closing costs, plus whatever work you're gonna have to do to move in, and enough for reserves and everything else. You're gonna need about 200 grand or more in the bank to buy that house at a traditional 20% down conventional mortgage. Now, depending on your credit, depending on if you're maybe a veteran, first-time home buyer, there's lots of different lender programs out there that you can buy a home for as little as 0 down still, if you're a VA and you meet certain qualifications. Maybe 3% down on a conventional, 3% down to where you only put down 1%, and the bank puts down 2%, and then you get all that back.
So there's income
3.5% for your FHA. There's lots of different, 5% conventional, 10%. There's lots of different things, and just know that the lender you choose is just as important as the agent that you select to go with, because you want to have as many choices and options and things available to you to do that. So if you're thinking about it, still buy that home if you don't have a
100%.
huge chunk of money.
Yeah, and your agent should be able to refer you to a lender or two. Your agent should be able to provide access to that information, but you should note that you should always, 100% of the time, get somebody that you can shop that lender against. And you should always know, in case your agent doesn't tell you, you should always know that you have the right to shop. 100%, you are not obligated to use the agent's lender in the same way that you're not obligated to use the agent, right? So keep that in mind.
Because sometimes sometimes you'll talk to the lender first, because maybe you know a guy that works at a bank, and that guy at the bank will say, hey, I can give you a better deal if you use my agent.
Right.
That's also something that's not required.
Yeah. So, and I don't want to stay on this for more than like 2 minutes, but I want to share a quick story with you guys because it's totally relevant in this part of our conversation. So, I have an investor. They're not a massive investor, but they do own a few condos locally. And I always help them rent the property back out when it comes up. And it was listed at $2,600. We ended up, I think, renting for about $24, if I'm not mistaken. And I had a couple of people that wanted to see it on one particular day. It was about mid-October of 2019. And this gal came in, and she had been renting across the street in the apartments over there, just down the road here, for like 8 years. And I had asked, I was just trying to get to know her, understand her story a little bit more. I said, out of curiosity, there's no hard seller pressure, I'm just curious. I mean, it sounds like you've been renting for a while. Is there any particular reason you don't want to buy? And her comment was, we're just looking to get into a place that feels a little bit more like a home, but we definitely can't afford to buy. And I said, the payment that you're looking to step into, even from a rental perspective, is pretty steep. It's not the cheapest, right? And she goes, yeah, but I don't have $100,000. And I said, okay, so the property you're standing in right now is probably about $450,000 if we were to put it on the market to sell instead of rent. What if I told you that you could purchase this property for give or take about $20,000 out of pocket? And her jaw hit the floor. And I said, here's the thing. I said, I don't know if you're going to love the payment. And of course, you have to qualify. You have to see what makes sense for you. But a lot of people don't realize that they can buy a house for a lot less money out of pocket than they realize. And there's some pretty substantial benefits to it. There's tax benefits. There's, you get the opportunity to not have to ask permission to like make changes or to paint the wall or to hang something up, right? So
or have your rent go up year over year.
Yeah, if your rent go up year over year, yeah. And so a lot of opportunity there, right? And your house over time becomes a bank account. It's something that you get to put money into and actually realize the benefit of having money go towards that principal, having money build up in there over time, right? It's called equity. So they actually closed Escrow and bought their very first house after 8 years of renting and not coming in shopping for a home, but getting just a tiny bit of education, which really highlights why we're doing this today. They ended up buying their very first house for $420,000, a nice 2-bedroom condo right here in Rancho Santa Margarita, and their payment I think ended up being like a little bit more expensive than the rent. It was like $2,700-ish, $2,800-ish, but the benefits of the taxes that they'll get back, the tax benefits, from purchasing the home is really cool because they're going to end up netting more. It's going to net them down to a lower price than what they would have paid for rent. So anyway, enough on that. But I thought that was a nice little story I could share with you guys. I don't need an agent until it's time to write offers. Talked a little bit about this already, but involving an agent early on is really key, you guys. If you don't involve an agent until you're ready to write an offer, you may just be in a position where you miss the boat. It's important to have, at the time that you're ready to write an offer, you want to have an agent that you're comfortable with, that you know can negotiate on your behalf, that you feel good about. They're going to go to bat for you. They've explained everything. They've gone through the paperwork. But also an agent that has a good working and communicative relationship with your loan officer, and make sure that you're ready to go, because you're going to need a pre-approval or a pre-qualification, which we'll talk about in a couple minutes. But this is why you don't want to wait too long. A lot of people do their research right up until they're ready to rock and roll, and then all of a sudden they're like, man, they just kind of like slingshot and they act out of desperation. And you don't want to be in a position where you're acting hastily. Is that the right word?
Yeah, that's when mistakes happen. We talked before about taking time to maybe, if you felt comfortable talking to more than one agent before you figure out one. Well, if you get to this point, you don't have that luxury and that time to talk to more than one agent. You could end up picking someone that doesn't serve your best interest. Maybe you feel, oh my gosh, I'm just going to have to go through the listing agent, and now you're not actually full as represented as the other side would be. There's a lot of things to that, to what we talked about.
Yep, and on that same note, I don't need to talk to a lender until I'm ready to make offers on a house. Well, let me tell you something. Unless you are writing a cash offer, you should be talking to a lender about how you get to leverage their money to buy a house. Because I don't know about you, but if you came to me and were like, hey, can I borrow hundreds of thousands of dollars so that I can go buy this house? I would say, yeah, is it cool if we talk about it? I'd like to run some numbers and kind of check into you a bit, right? So if you involve a lender too late, then you miss the opportunity to go through the appropriate steps, get the appropriate paperwork done to make sure that you are truly qualified and that you would actually be comfortable with the payments. It's not as simple as just saying, you know, dividing it by 36 months. You've got to add in interest. You've got to add in, you know, it's PITIA, so principal, interest, taxes, association, and insurance. You know, so there's more that goes into it than just, okay, I think it comes out to about $2,500 a month if I take this and divide it by 36 times 12, whatever, right? So.
And it works the other way too. You could be shorting yourself. You might be able to afford more than you think on a purchase, and now you're like, that opens up more possibilities. But the biggest thing on these two is timing, especially in I know most markets around the country, especially in Orange County, you've heard, oh my gosh, there's not enough homes available on the market. Well, if you wait until the end to have to get an agent and talk to a lender, you may miss the house that you really, really want just out of timing, because this could take 2, 3, 4 days to get all wrapped up and ready to write that offer, and in the meantime, they've already accepted another offer, or more than one offer, and you've lost a boat.
Yeah, I see some nods back here, so
Maybe it's happened before.
you know, it's amazing how many lessons you learn on the first time that you purchase a home, and not all of them are friendly, so it's pretty crazy. But another myth is that the seller will pay for everything. You know, there's costs to buying a house, and there are some costs in different markets that are going to be more traditional for a buyer to pay or a seller to pay. Closing costs, for example, you know, lender fees, you know, like your loan origination fees and all that. I'm not going to go into every single fee or cost that there is, but you as a home buyer are going to pay for home inspections. You might pay for additional inspections if you feel like it's necessary. But the seller generally won't pay for everything. You have to remember, even in new construction, and this is really, really important, guys, even in new construction, there will be flaws. I sold my parents a new construction house like 5 years ago down in Rancho Mission Viejo, and I can't even tell you how much tape there was when we went through for the imperfections and the disconnects and a window that had a broken seal. It was brand new. It'd been in there like nobody had occupied the home. But the seller might pay for things that they cause a defect on, but most of you are going to be buying a resale, okay? So it's not a brand new construction house, and there is going to be problems, and guess what? Problems are fixable, okay? Problems are fixable unless an inspector comes out and red tapes the house and says, hey, this is definitely not habitable, and it breaks all the codes, and you can't live here. Nobody's allowed to live here. It's a health hazard. The problems are fixable, but it doesn't mean that the seller will pay for everything, and that comes into play with making sure that you have an agent ahead of time. Oh, where's my cool laser? There it is. Oh, well, it's reflecting. But anyway, this is why you need to have an agent up front, so that you know you have someone who can negotiate positively on your behalf to help you ultimately get the seller to pay for things that are important to you, but also to articulate what might be a big ask and what you may not get, and to help you set appropriate expectations. Otherwise, you could really feel let down. So.
Always make offers below list price, because there is always room to negotiate. I already touched on the market, touched on homes available in the market. Just as a quick aside, when we started January of 2020, we had 1,900 fewer homes available in our market than we had in January of 2019. That means there are 2,000 more buyers out there that are now competing for a smaller pool of homes, because there's just not enough homes to go around. So if you're trying to offer below this price because you think that they're going to negotiate you up, likely they're getting other offers in that are at, or maybe even slightly above market price, and you're going to lose. Just flat out, you're just going to lose. Also, while there is always room to negotiate, sometimes a better strategy is to go ahead and offer a little bit higher, because maybe the condition of the property dictates it's going to need some stuff done or whatever, or maybe you just know that always lowballing, it actually kind of more often than not puts you more in a position of weakness to start out instead of a position of strength, because everyone's emotional, has an emotional attachment.
Yeah, I stepped back here and they said, so the gal said, should I always, so does that mean we always have to come in at asking price?
No.
That's a great question, and to clarify that, you absolutely not.
No, you want to look, if you have the agent that you select should be able to look at the comps with you, just like a listing agent's going to do when they hopefully came up with the correct list price for the home.
A comp, by the way, is a comparable sale, something that may have sold in the neighborhood that's similar to what you're buying. It gives us an idea, an educated guess on what it might sell for.
So maybe, and that might be the only time that it would be appropriate to come in below list price, is because if your buyer's agent's good and they look at all the comps and say, you know what, they're asking 700, but I don't see a recent sale in the last 6 months that even comes close to that. I'm looking at like 660, 675, 680. Well, now you make an educated offer, and then your agent can submit that offer with the details and the education behind that, and it's not just a willy-nilly price you pulled out going, I'm always going to start low.
Yeah, and I can't go into detail about the specific location of property because this is an active negotiation right now, but to give you guys a real life example, there's several condos on the market right now in this local vicinity, and some of them have been sitting on the market for a while. Others are brand new on the market and are in pretty reasonable condition. And I showed one in the past couple of weeks, we'll say. And long story short is, as soon as I opened the door, I knew it was going to go fast. I knew that we were going to have multiple offers. I knew it was going to be a really competitive environment, and I had to talk to the buyer about that. Fortunately, they'd taken the advice. They had already talked to a lender. I'd been working with them for a while, so they were prepared to take quick action on it. But within 24 to 36 hours, there were 4 offers on it. We were one of them. Okay, we're still waiting to hear, but my point is, you have to understand your position. Every market is a good market to buy and sell a house. You just have to know when to play your ace. Okay, and so, and that's something I tell people all the time. And the conversation I had to have with my client, and you would be a buyer in this circumstance as well. The conversation I had to have is what I like to call a no regret price. And in a competitive situation, you don't want to overpay for something just for the sake of it. That's not going to serve anybody. But what you do want to do is make sure that you put your best foot forward the first time, because you may not get a counteroffer. They may not negotiate at all and just take the best offer that they got if they have multiple, right? Because maybe the seller just doesn't want to dance in gameplay. And what I told him is, I said, do your no regret price. Excuse me. And your no regret price would be defined as the price that if you woke up tomorrow and got the house, you wouldn't feel like you overpaid. And likewise, if you got the house and woke up tomorrow, or excuse me, if you didn't get the house and woke up tomorrow, you wouldn't feel like you left $1,000 on the table that you would have been willing to spend just to try and get it. So it's the price that you're happy regardless of whether you win or lose. And so you have to understand, and this is where your agent and your lender and if you do your own diligence and research, this is where it becomes really, really important that you're working with someone who understands the market, because a lot of people think that real estate agents are all about selling, and I'm here to tell you that my first job as a real estate agent is to provide consultation. Hence why we're here today, right? So consultation is incredibly important, and I'm a consultant first, and then we leverage the information from that consultation to put you in a position to make decisions, and then you ultimately get to pick which path you go down based on that consultative advice. So I don't want to kick the dead dog. We'll keep going, but hopefully you get the point. Did I miss anything on that? I can talk for days. Oh, go ahead.
The only thing I would ever tie in is when we originally talked about searching online.
Yeah.
And you'll see things if you're on like a Redfin or a Zillow, and they have their estimates or what they estimate the home's value to be. This is where your agent can show you, this is what they're saying, but if you look at like page 8 on their website with all their disclaimers, they know that they have a plus or minus of X error percentage, right? Because this is what the comps really say. So it all ties in together.
Yeah, and I guess we didn't put that on here, but very quickly to expand on that, and this is where you'll hear a lot of people say, well, gosh, I mean, agents are a dime a dozen. Just FYI, they are.
Zillow says it's worth $680, that's what I want to offer is $680.
Yeah, there are 40,000 or 45,000 agents in Orange County alone, so I'm not saying we're not a dime a dozen.
140 in California.
But 440,000. But there are agents that are worth a little bit more than a dime. Some are worth a quarter. Some are worth maybe a nice crisp dollar. But the point, How demeaning could I be in our own presentation? But no, yeah. But to Ron's point, it's important to have an agent that can really dissect and understand the market, because if there's any place that an agent is protected in our ability to conduct business and to add value, and somewhere that a computer just can't do what a human being can do. Computers are great at algorithms and doing math that is far more complicated than this tiny brain can put together. But one thing that's really, really important to understand is that the computers are doing a simple law of averages. What they're not doing is saying, oh, it's a law of averages, but this is a corner lot, so let's add more to it, or this one.
It's been remodeled.
Right, and only an agent with knowledge of the area is going to be able to add that extra balance for. You might have a corner lot, but it backs to a busy road, whereas the other one that sold has a corner lot and a beautiful view of the mountains, right? And so those are the types of things that, like a Zestimate or some third-party estimate website that uses an algorithm and some automated calculations, just are not going to be able to perform at the same level that an agent does.
One thing I like to tell people.
Are you guys getting all this?
They'll say, Zillow says it's worth $680.
Yeah.
And my first reaction, I don't care if it's a buyer or a seller, when I get that at a first appointment, is I'll say, you know what? When was the last time you invited Zillow to come in here and actually look at your home?
Yeah. Yeah.
And that seems to kind of like level everybody off really quick.
By the way, really quick, I know I'm making goofy faces and comments over here to the phone. I own a company called REALTOR. It's a real estate education company, and I help train agents on how to grow their business. So thanks for indulging, and guys, thanks for putting up with us, because I'm doing something weird today. I wouldn't normally do this, but this group has about 2,000 agents in it, and sometimes someone goes in there to learn something. So thanks for playing along. Yeah, not often. There's like 3 people that go in there every now and then. So are you qualified to purchase? Do you need a loan? How many of you here have at least $1 million in the bank? Yeah, definitely don't. So do you need a loan? And this is where you're going to ultimately start involving what's up, buddy? Ultimately involving a loan officer and going through the pre-qualification process. So it's important for you to understand that if you don't have money in the bank, if you don't have somebody that's going to give you the financing to ultimately be able to pay cash, then you're going to need a loan. And in order to get that loan, you're going to need to talk to a loan officer and ultimately get pre-qualified. So do you want to talk about pre-qualified?
Sure. So there's a difference between pre-qualified and I forget if we have actual pre-approval.
Yeah, we'll talk about that.
Okay, so being pre-qualified could be as simple as having about a 10 to 15 minute conversation with a lender over the phone, where they're going to ask you questions about what's your income, what's your credit score. Maybe they'll look up a soft score while you're on the phone with them, and you'll tell them like what you're looking to purchase, what you want your budget to be, and they'll give you a ballpark of, yeah, I think we can do it for X, and I'm willing to give you a letter that says you're pre-qualified. But when that letter comes out, it's going to have all those things that you need to meet this, and this. There's a lot of checks that are going to have to be met for verification purposes. So that's what pre-qualified is. In our market, and ever since I've even been working in real estate the last 5 years, a pre-qualification is really just kind of a first key indicator on if you should even take the next step for purchase or whatever. So
yeah, and just to clarify, so pre-qualification is kind of like Ron was saying, it's like that 15-20 minute conversation you might have with a loan officer, right? And kind of see if you check the boxes. But they're going to issue that letter based off of information that they're trusting you're giving is accurate, right? So they're going to say like, how much money do you make? And you're going to say, this is what my gross paycheck is, right? And then they're going to say, cool, like, do you have any debt? Do you have any credit card debt? What are your monthly payments and responsibilities?
Do you have any assets?
Right.
Like married, single, divorced? They're gonna go down the litany of the application questions, and it's just a verbal conversation.
Yeah, which leads to the next point, which is what's the difference between pre-qualified and pre-approved. So the difference between this is blood on paper. It's signing your life away, giving you. No, I'm just kidding. So yeah, that's gross, Ron. You're gonna need to wipe that down. No, I'm just kidding. So the difference between pre-qualified and pre-approved is the pre-approval process involves you actually providing the documentation and the paperwork to support everything that you discussed with the loan officer in that initial consultation. Okay, so the pre-approval process is where you actually are going to provide your pay stubs. You're going to provide your tax return. Yeah, you're going to show proof. Yeah, bank statement, credit card statements, all that stuff, right? You're going to
debts and liabilities.
Yep.
Whatever.
And they're gonna look into it and make sure that everything that you represented on the front end was true. And guess what? I don't know about you guys, but sometimes I forget that I had that extra credit card, or sometimes I forget that, oh man, I forgot about that payment, you know?
Or sometimes you find out you haven't had your credit pulled in quite a while, and you're like, whoa, I didn't know I had that. And you uncover some things you didn't know you had.
Right. And so moving to this kind of sub-point here, the advantages to having a pre-approval versus a pre-qualification, or the disadvantages. Our pre-qualification is really great if you'd like to go out and start looking at homes. It's kind of a nice thing to at least give you a general idea. Sometimes people think that they can purchase a house for $600,000 or $700,000, and in reality, they only qualify for, say, 500 grand. Okay, and so what a pre-qualification can do is at least give you an opportunity to have a conversation that allows you to kind of focus, kind of narrow. Yeah, where are you gonna be conducting your search? A pre-approval, on the other hand, gives you that really confirmed reality that you can not only be sure that what you're looking at is something you qualify for, but a pre-approval actually lets you take action and have some benefits. Because, like we talked about up top, do you need a loan? I need a loan to buy a house. But guess what a pre-approval does? A pre-approval, because you've already gone through the entire process, you've already confirmed with the bank, you've done everything. They can literally look at you and say, based on everything that we've seen and talked about, and they'll continue verifying, but based on all of the information you've provided thus far, you definitely are approved, and we're gonna back you, so go find that property. Guess what having a pre-approval does? It allows you to compete with cash offers. And the reason is because cash, the biggest thing that cash can provide is the ability to act fast. Having a pre-approval allows you to act much, much faster than a pre-qualification, because they've already done the hard work, the confirmation. Okay.
A couple quick things. This, like we said, this is a 10 to 15 minute phone call to be pre-qualified. It gives you a basis to go off of. Pre-approval goes as fast as you can get the information to the lender.
Yep.
So if you can get it to the lender in a day, you'll probably get pre-approved in a day. But if you lag and you're behind on pulling documents or whatever, you may not get this letter right away. Just know that. Secondly, pre-qualified, probably not going to write an offer with just a pre-qualified letter.
You could, but you're not as strong.
You could, it's just not going to be as strong, so you're probably not going to want to, because we talked about this allows you to compete against a cash buyer, right? So the pre-approval is more ironclad. It's the lender now putting his name and his stamp of approval, hence approval, on your ability to purchase.
Absolutely. So what do you have to do to get qualified to purchase a home? I don't know. We're both agents, so we can't really talk about that. Anyway, moving on. No, I'm just kidding. So, so to get qualified to purchase a home is actually not that tough of a process overall. It just requires you to get your paperwork together and to be organized. Let's say hypothetically, as an example, I were to give you a referral to a loan officer that I work with. What I would do is I would connect the dots, because every lender has different requirements and what they want to look at and what they require on the front end. Some of them have more overlays, and for lack of a better way to put it, it's their own internal criteria. Some of them make it a little, they want more confirmation, right, than others. And that's just so that they can know that they feel comfortable and protected to loan you potentially hundreds of thousands, or in some cases millions of dollars. So what you have to do to get qualified to purchase a home is you're going to have that conversation with the loan officer, and then typically in today's world what they'll do is they'll send you an email, or they'll direct you to their specific website, and then their website is going to give you a link, and with that link it'll give you a secure portal to upload everything, but it'll also give you a list of all the documents that you need to put in there. So to get qualified to purchase a home, you can start the pre-qualification process really quick, that 15-minute phone call, right, to a loan officer. To get the pre-approval going, they're going to have all these documents. They're going to send it internally to what we call an underwriter. That underwriter is going to go through, cross the T's, dot the I's, make sure that everything looks good. They're going to come back and say, hey, based on this, the numbers are looking wonderful. Here's your pre-approval. Or your loan officer might come back and say, hey, the numbers are a little tighter than we expected. Can you provide some additional information? They're going to want to track everything, right? So can you tell us, where did this deposit come from? Why did you take that money out, right? So there is a process to it, but as long as you're organized and you get your paperwork together, the pre-approval process and actually going through the paperwork to qualify for a home is not overly painstaking. There's a saying that the banks sure make you walk naked in front of them today to qualify for a home, but you have to remember how much liability and risk they have. And if you recall the terrible collapse of the economy about a decade ago, a little bit more, you can understand that the lending requirements are a little bit more buttoned up and fine-tuned than they used to be, which is why they're going to ask for so much verification. Go ahead.
Quick show of hands, anyone that is currently renting or you've rented previously. Okay, see a few of you. So all the information you ever had to turn in to even rent an apartment or whatever,
Yeah.
financial documents, it's a very similar packet that you're going to need for this. So if you have that still, it's just a matter of updating those types of things to upload it to the system.
Yeah, and that's really to protect everybody, guys, because the banks don't. Everyone thinks that like when a bank forecloses on a house, like, oh, how great, they got this awesome asset, but the banks don't want to do that. It's a royal pain in the rear end, and it's quite a depressing process, to be honest with you. The agents actually, although we can make money on it, it's not the most exciting part of the business. So you just want to make sure that you're qualified appropriately to purchase the home. I felt like I had something else to say, but I'll come back to it when I think of it. Okay, so now you're qualified. Gosh, we're a little behind schedule, but we started a little bit late. So I'm qualified, so now what? So, this is what I was going to say. I forgot that we put this on here. So no major purchases to impact credit. Once you're qualified to buy a house, guys, you're not going to go out and get a new lease on a new car. You shouldn't be going out and opening a furniture line of credit for Macy's to go buy that couch that you want. Like, you shouldn't be doing all that stuff. So what you ultimately want to be doing when you get qualified is any major purchase or credit line that you need to open, you legit need to contact the loan officer and say, hey, I was thinking of getting a new car. Is that something I should do now? And they're going to either say, absolutely, you're fine, your debt to income ratios are okay, or they're going to come back and say, you know what, I would hold off. If it's necessary, then go for it, but just know that it may impact your amount that you can purchase. So instead of buying a $600,000 house, you would only be able to qualify for $450,000.
Or you may need more cash to close.
Or yeah, and cash to close meaning you may have to have a bigger down payment, right? So instead of getting that opportunity to put that 3% down, that 20 or 30 grand, they might come back and say, gosh, you're going to need 80,000 to put down, right? So you kind of have to weigh the pros and cons. You still need to be able to live your life. But guys, I'm telling you, especially once you're in escrow, if you start making these big purchases and you don't ask the loan officer, it's literally the difference sometimes between buying the house and not.
Do we have employment on there too? I forgot.
Oh, change of employment? No, we didn't talk about
so
that.
Along with the no major purchases to impact credit, it goes right along with it is if you're thinking of changing jobs, always run that by the lender as well. Sometimes it greatly impacts your ability to where it kills you to be able to buy a house if you have to change job.
Mm-hmm.
Sometimes it doesn't. Sometimes it's just a matter of
you're changing industry.
Yeah, sometimes you're staying in the same industry, but you're going to another company, right? And you can show, hey, I'm getting a pay raise, or I got a contract for X amount of years.
Mm-hmm.
And at worst, they may say, okay, well, you know what, we're just going to need like 1 or 2 extra pay stubs from you at the end. So maybe it delays, like if you're in escrow, it might delay an escrow or something like that. So it's not the end of the world, but just the gist of the first bullet point there is anything you need to do, run it by your lender first.
Yeah, well, can I use the bathroom? No. So anything you need to do that has an impact on you financially. Understanding the market you're offering in, I think, I don't want to spend too much time on this. I'll catch us back up here, but we kind of talked about that. You need to understand if it's a buyer or a seller's market. You need to understand if you're operating in a price range, regardless of whether it's a buyer or seller's market. Some price ranges are more competitive than others because they're move up and move down price ranges. Maybe it's an entry level price range. So
lending restrictions.
Yeah, different lending restrictions. So this is where having a good agent comes into play. Making the actual offer is not a totally overwhelming process as so many think. Although there's like a bajillion pieces of paper. I mean, our purchase agreement alone is 10 pages, and there's additional disclosures that go along with that. One of the things that you should note is that your real estate agent pretty quickly can get everything dialed in and structured into that offer, and to be able to go through it with you point by point and kind of give you the gist. You should read every offer that you write. You should understand the purchase contract, but you should also have a realtor who's competent, who can actually go through that process with you. When you're ready to make an offer, it's nice because the pre-qualification or the pre-approval letter, specifically the pre-approval letter, depending on the institution, could last anywhere from like 60 to 150 days. And what's nice is that's basically like your ticket where they say, cool, like here's your punch card, like go play, go find houses and write as many offers as you want until you get the house that you want, right? So once you're qualified and you have the, or fully approved, sorry, my poor choice of words in the title there, but then you can go out and actually make offers. So what is earnest money? During the offer, the escrow process, there's a transfer of risk during the escrow process, and that transfer of risk happens revolving around what we call a contingency period, and we'll talk a little bit more about that. But earnest money versus down payment. Earnest money is basically like your exchange, right? Because in the front half, in the beginning of escrow, when you make an offer, if the seller likes the offer that you write, what they're going to do is they're going to take the house off of the active market, right? And then they're going to say, cool, we're going to take the house off the active market and let you, the buyer, have an opportunity to do your inspections and to do your due diligence and your research, look at the homeowners association documents, all those things, and make sure that it actually lines up with and looks good and is what you expected it to be based on what you saw when you initially came in. In exchange for that, though, the seller wants to know that you're serious. So they're not going to just gift you the opportunity for them to take it off the market because, hey, they could get other offers that are really compelling and really good. So instead what they're going to do is they're going to ask you to put some good faith money down. So an earnest money deposit is kind of like good faith. Out here in Southern California, I'd say roughly about 2 to 3% is what I advise buyers, 2 to 3% of the total purchase price.
There's some legalities behind that.
Yeah.
Why you do it. And also that it doesn't seal the contract. So
right.
Typically there has to be consideration on both sides to actually bind the contract. And you putting your earnest money down is your consideration to bind the contract. The seller is putting the title of their home down to bind the contract together to open escrow.
Yeah, so to your point back here, this does go towards your down payment. So I don't know if you can hear it on the phone, but the question was, does earnest money go towards your down payment? The answer is yes, only if you close, of course. Now, can you get the earnest money back? There's absolutely 100% no guarantee that you get your earnest money back in the event that you cancel the contract. However, because I'm not an attorney and I'm not going to play that game, but usually if you have not removed your contingencies, meaning if you did your home inspection or you didn't qualify for the loan and all of a sudden you said, gosh, I just can't buy this house, it's not what I thought it would be, normally you would get your money back. What ends up happening sometimes is people don't get it back when they put the money at stake, meaning they've actually removed their contingencies. Okay, so this is where that transfer of risk happens, and this is where the earnest money comes into, gets put at risk, right? So at the beginning, you say, hey seller, I'm asking you to take your house off the market so I can do my research. Please don't accept any other offers. I want to check it out. In exchange for that, let's say hypothetically, you're giving them $10,000. That $10,000 goes into an escrow account, a neutral third party, so the seller can't just run away with it, right? But if everything in the house looks good, and you say, you know, things are looking mighty fine on this, and I think I'd really like to buy this house, there's a transfer of risk. So the second half of escrow, the risk transfers over to the buyer, and you're gonna, what I like to call it, going hard on your money. So you're gonna say, cool, I'm gonna remove all my contingencies. I'm committing now to move forward. And if for some reason after you've removed all of your contingencies, you've already told the seller, this is the house I want, I'm not backing out. If you back out at the 11th hour, you get cold feet, then your earnest money would be at risk. And that basically acts as an opportunity for the seller to be reimbursed for the damages that they have for missing the opportunity to get other offers or to accept something that may have actually closed and gone through. So it doesn't mean that if you remove contingencies and then back out of the deal that you automatically will lose your money. It also means if you haven't removed your contingencies, you're not guaranteed to get it back. There's a lot that goes into this, and your agent should go over that with you. But your earnest money is basically an exchange to say, hey seller, please take your house off the market so that I can do my research. And the seller says, cool, prove to me that you're real and have money. And then you go do your research, they have a little bit of collateral, and if everything looks good and closes, then let's say you put $10,000 in earnest money, that would go towards your total down payment when you close. Does that all make sense? Some nods, a couple of brains exploding.
Some of you might be wondering, because maybe you're going to be 100% financing with VA. So what happens to your earnest money deposit? Say you put $5,000 down and you're 100% finance. Well,
you're telling me wrong.
You're still going to have closing costs, and it'll just go
What up, guys?
And if there's anything left over at the end, you'll get that back.
Yeah.
So your money's always going to be used at something. Yeah. Or you'll get it back.
So, earnest money versus down payment, I guess I kind of talked about that already. So if there's any questions about this or clarifications about it, please just feel free to approach us at the end. This is a really important one. I just want to make sure that we're really clear on. What if you're only putting 3.5% down? What if you're only putting 3% down as your down payment? And then James said, oh my gosh, he said to put 2 to 3% down for earnest money. I just think it's good to put a little bit, the more you put down in earnest money, up to 3%, and I won't go into all the legalities around it, but the more you put down in earnest money, in my opinion, as an agent, shows your strength as a buyer and shows how serious you are. So it can make the difference.
More skin in the game.
Puts a little more skin in the game. If you come in and limp in and say, hey, $500, the seller goes, cool, like there's not a lot of risk for you to just completely screw me over and cancel your contract. So the more you put down, it shows the seller that like, hey, wait a second, like that's a big chunk of change. This buyer's serious.
And it still boils down to knowing your market.
Yeah.
Because if you're in a really competitive market, you're going to be competing against people that are willing to do more or less.
Yeah, it does go towards your down. Take it away.
My offer was accepted. What is escrow? Okay, escrow is basically the process that you have your offer signed, you make your earnest money deposit. Escrow is a third-party company that's going to hold the money, hold all the funds. They're going to coordinate all of the documentation for title, for everything that gets turned into them from inspections, disclosures, everything else. And an escrow could be, depending on the type of offer, if it's cash or finance, it could be anywhere from like 3 to 7 days to 45 to 60 days, depending on if the seller needs a rent back or there's complications with the loan or what have you. But it's basically going to be the whole process of you get a chance to do all your due diligence, review disclosures, sign off on paperwork, send that in. There's an escrow company and an escrow officer who collects all that information, makes sure that everything's signed off on, and at the end of that period, everyone comes in, does their final signatures. They handle the wiring and the transfer of funds from one party to another, from a bank to a bank, or third party to a bank, however it's going to go. And
yeah, so to
that's the basics of an escrow.
To dumb it down even a little more for my little brain, escrow is basically a neutral third party that makes sure that they're not taking sides. So if buyer or seller get in a fight, they sit there and go, hey, y'all got to figure it out before I release your money or before we take action or before whatever. They make sure that all the ducks are in a row. So look at escrow like this. Escrow is a neutral third-party company, all right? So look at it like this. I represent the buyer, Ron represents the seller. We get all of our paperwork, all the money for each party that needs to be dialed in. We come over here and we set it on this table, okay? And we say, hey, escrow, here's all of our stuff. Figure this out. And then what escrow does is they organize all that paperwork on the table, they put it into the piles, they figure out where it needs to go, and then escrow takes the time to say, okay, step away buyer and seller, okay? We're gonna give this to this agent, this to that agent, this goes to the loan officer, this goes to the title company. So escrow basically is they're the hub of the wheel.
They're like the octopus with all they got all their hands just going do, do, do,
yeah,
do,
they're literally the hub of the wheel, and they make sure that everything that comes into them is not only signed and documented and properly done, they make sure that it gets redistributed to the appropriate party based on what is actually written in the contract. They are not there to play referee. They are not there to act as judge and jury. They are literally there to look at what is in black and white and say, just following the instructions of the contract. So if there's a dispute between buyer and seller, escrow will hold everything and just say, cool, y'all figure it out, and I'll wait for direction on what to do next. So they are literally a neutral third party, so that in the event that there's a fight, somebody can't just take their money and leave. Everyone has to figure it out, and then escrow has to either have instructions that are mutually agreed to by buyer and seller, or from a judge before they can move forward.
And they're going to ask questions as well, because they're going to be the ones reviewing all the documentation, reviewing the contracts, reviewing the timelines that you set in the contracts.
Right.
And they'll email out or they'll communicate out to both sides. This is what I'm seeing. These are the timelines that I see. This is what you've all agreed to. That's at the very beginning. Is this correct? Yes or no? And then you have a chance to kind of like change stuff and then make sure that it stays on the right path.
Right, 100%. So then contingencies. Contingencies, and I feel like some of the stuff I put on here is kind of overlapping, but there's a lot of redundancy and a lot of these things tie together, as you can imagine. Contingencies are basically the investigations that you do. So a contingency period, like let me just say the words, or the way that this lays out. I'm going to write an offer on Ron's house, and I am a contingent buyer. Me purchasing Ron's house is contingent upon me getting a loan approval, me doing inspections on the property and making sure I like it, an appraisal, which is the bank's, a third party that comes in and values the property and says it's worth what you're gonna buy it for, so that protects the bank's loan, right? They say, okay, I'm not gonna lend on a house that's worth less than what you're offering. Final loan approval, making sure that the buyer can actually close, and a plethora of other things. There could be other contingencies in here. A contingency is basically a point that it's an out, basically. A contingency is I want to buy your house, but the contingency is a but. But I want to clarify this, that, and the other. But I want to read the HOA documents. But I want to make sure the roof looks good, right? So that's what a contingency is. But, excuse me, I want to make sure I qualify for that loan, okay? Does that make sense? I see lots of nods and like kicking the dead horse over here.
Request for repairs, every contract is as is unless otherwise agreed to. So, at some point, you're gonna get through all your contingencies, you're gonna come in and do your inspections, right? And you're gonna inspect, if it's got a pool, you're gonna most likely hire a pool inspector, maybe hire a roof inspector, maybe hire a separate HVAC inspector, a general home inspection. You're gonna start with a general and maybe work your way out from that. And they're gonna come back and say, you know what, the ducting is bad, or there's something wrong with the pool cleaning filtration system, or there's a bunch of fuses blown in the panel, whatever it could be. There could be some structural issues, there could be electrical issues, there could just be cracks in paint, there could be whatever. You're gonna get a chance after inspections to do what's called a request for repairs. And at that time, you kind of figure out, hey, I would really like to ask the seller, and just know that a request for repairs is technically not one of these but or out situations, right? A request for repairs is strictly between buyer and seller. The agent is not technically party to that, but it's you as the buyer, you get a chance to say, hey, you know what? I noticed that like a bunch of cabinet hinges were broken. There was a couple holes in some walls from some doors. Can we get that stuff fixed? Yes or no? And if not, can you provide a credit of maybe X amount at closing to cover those repairs based on I had someone come in and give an estimate, right? The seller can say yes, the seller can say no, the seller can counter back and say, you know, we'll fix this A, B, and C, but we're not gonna do D and E. Or the seller might say, I know you're asking for $1,000, but we'll give you $500. Basically, what it boils down to is just another negotiation point between buyer and seller. And again, it's technically not one of these but or out situations like a contingency is, even though your inspection contingency and inspections that you do kind of trigger that.
Yeah.
Some people try to use this as an out to say, well, I'm just not gonna go sign my loan docs then.
Yeah, hey,
I'm not gonna close unless you do that. Well, that's when you circle back and go, but you've got 10 grand on the hook here with your earnest money deposit. Yeah.
You have to operate in good faith.
You have to operate, yeah, that's not operating in good faith. So both sides should be operating in good faith. I've personally never had a deal fall apart because of a request for repairs. Does it happen? Absolutely.
I've definitely had deals.
Absolutely. I've never had it. At the end of the day, typically courts prevail in this, unless it's just a complete a big issue.
Yeah, and so really quick going up here for a second, back to inspections. Inspection reports could be 25 pages long, they could be 80 pages long, depending on the size of the house and the number of issues there are.
And depending on how many inspections you end up having done.
Right. Everything gets called out, okay? Inspectors aren't, they're not God either, so they're human. They'll miss a few things here and there. But the reality is the home inspections are pretty detailed, but they open up the possibility of you probably getting more inspections. So if you see that, like the home inspector is not a specialized contractor, they're there to do a general home inspection, right? And then they give you hints on, hey, it looks like something may have happened here, you should hire a plumber and go look at it or whatever, right? So not everything in a home inspection is, in my opinion, something that you should just go like, hey, here's 60 pages of stuff, we want it all fixed. It's typically not how it works. I've seen it asked for. That's not usually a good conversation.
I had it just happen.
Yeah, but the request for repairs is not a contingency, but the request for repairs should happen during your contingency period. This is a separate
Right.
negotiation, and if you are going to negotiate this, let's say you have 17 days to do all of your inspections and make sure the house looks good, you should probably start this negotiation on day 14 or 15 at the latest to give the seller a couple of days to respond. Because if this is substantial and there's $30,000 worth of damage that you were not expecting on a property, gosh, I thought the roof was good, I didn't know it needed replacement, that may be one of the reasons you say, gosh, I think based on the inspection and based on the fact that we didn't realize there were $30,000 of repairs until after the inspection, we're not mad at you about it, but if you're not gonna fix it or credit us, then we want out.
Yeah.
You want time to negotiate and have those conversations.
But you would circle back and use your inspection contingency as your out, not the request for repairs.
100%.
Does that make sense? Yeah, nod, yeah, okay.
So close of escrow.
Woo!
Congrats about us. So guys, first of all, thanks for being here. You know, we'll stay after to answer a few questions, of course. I don't want to put anybody on the spot. I know you guys have been kind of a quiet bunch, but you haven't laughed at all of my humor, which we'll talk
Because it
about
wasn't
later.
funny.
Yeah. But yeah, there is definitely a lot more that goes into buying a house than just what we've covered here. That's, you know, there's a lot of risk that gets taken on by an agent to make sure that we're presenting the appropriate information, the appropriate documents, to make sure that our market analysis, our home valuations, and you know, the guidance and consultation that we provide. There's a lot of, I mean, we actually have separate insurance policies to protect us just to make sure that like we're actually doing our job the right way. So there's some risk involved in it, and it's really, really important that not only you're working with a good agent, but that you're working with an agent that you personally are comfortable with. So you may look at me and be like, dude, I don't like how James doesn't button the top button. I would never work with an agent who wears Converse, and I didn't really appreciate his sense of humor. That's fine. I would love to work with anybody, but I don't want to work with someone who's not comfortable working with me. And I would say the same for you. Do not engage in a contract at the levels of what we're talking about today if you are not in a position where you feel comfortable, because these are high dollar contracts. There is a lot at stake, and although it's not rocket science to buy a house, you do need to understand the process, and any question that you have does need to be answered by a professional who knows what they're talking about, because you don't want to check the wrong box that costs you money.
Yeah, I mean, our current RPA, not including addendums and disclosures, is now 12 pages long.